Welcome to TradeTheMBI.com. This is John. This report is for the 27th of October. Well, no surprise to anyone with our MBI white leading as strong as it was. And then we see the new lows being made on the ES. And of course, the ES less significant to what we've been following on the NASDAQ. I shrunk the daily so we could see the next level of retrace potential, the 39.78 range for the ES. Um, and it's just a question of how strong the leading eight do when it comes to these earnings. Amazon obviously reported positively. That's giving a boost the pre-market here to the market, and we can see the beginnings of MBI Magenta crossing over, even though it's in a pretty deep state, which usually keeps things modest as far as any recovery. And the shakeout certainly not making any improvement whatsoever. And obviously, if you look at the extreme dip below the red line, meaning we're likely to retest that low at some point, even after a press higher. This is the chart I was showing you on the Skype chat from reducing. And, you're interesting to note that, at least from a NASDAQ, when we go, price currently is at the June levels. But if we go back to the ES chart here, you can see from a relative price standpoint, we're all the way back to, April values. So huge difference between the two relative to what's taking place, and that just shows the tech area has been doing significantly better. Next level of retrace, right down there about that 13,170 range, and that's a dip below the red line coming back here at the end of April, and that would show the relative move from the highs. Coming back down right now, we're at this about 11% pullback within it, and no shock. I mean, this is the number we had set here as soon as this breakout started, so it was just a matter of when it gets there. And like I said, time is less relevant to algo setups than it is to individual moves until it reaches its target, and it takes advantage of it all the way through. From a treasury standpoint, again, yield is way higher than where the Fed has things, and it's an indication from the market that the Fed is going to have to act, or just that money should be more expensive in this case because of the demand on it. And you've got these deficits that are just staggering from a numeric standpoint and what they mean from a GDP and how much it pulls from the relative economy. You throw in oil, sucking out a lot of that as well, and maintaining itself in that mid 80 range. Longer it goes, it just puts that much more added pressure. Of course, it's drained a lot of the excesses, which is ultimately what the Fed's whole goal on this was. From day one is to remove the excess liquidity from the COVID era, and it's done that and more. From the euro standpoint, again, going nowhere, and the fact that it's even holding up as well just means the support from central bank area has been significant. But gold's going to continue its press because there's just no other reason why it wouldn't, simply because as a counter to the inflation that is going to continue, it's a necessity. Alternative ones such as Bitcoin and ETH, that also having a nice run from this as well, and none of that's a shock. Could start to see a little bit of softness there from an ETH standpoint here with the pullback of the MBI Magenta off that big run, but it's still well above the 33 levels, so modest at best would be the look. And so this is when we go back to our 50K. We can see as the breakdown has taken place, we've had these little pushes, nothing really much stronger than a 50% move there. The best we had was a few days ago when we reached the 100, and they tried to do a second run at it, was unable to hold it. And that failure to break out from reaching that 100% has led to this significant retrace setup. It's like a broken record when you say it's not, because the readings were pretty clear from how that was going to go. Intraday was also quite good. We started out with the MBI white spike as we broke out into the pre-market, but it's still going to call for a move to the 0%. And you made another attempt right as the market opened, but we went right back to the 0% again. Secondary MBI white. Same thing happened on the breakout here, coming from the start, and it did pretty close to exactly the same thing. They just sometimes when they produce the large wick, and this is rather bullish when that happens. If you don't come back and fill back in that complete 100%, usually you look for a build, and in fact, that's exactly they just waited to the market to close, and of course you had the support of Amazon within that, and that has bolstered uh, post-market trade at this particular point, and reached new highs right there. Not really under any positive extremes or anything, so there's plenty of liquidity supporting it at this particular stage in the European session. And right now, getting a little bit into that oversold right around the 50%. So that would be a critical area for them to break past and move up towards the market open, which would give enough strength to have that propel anything. Wouldn't be overly optimistic about how much it can do given where we're at in general with those daily market readings as well as 50K. So keep that one in mind. It's going to be more of these nice little runs. You get the excellent move up and nice solid retraces to it. I don't think we can object to that at all. As we get weekend 29th, so nobody's going to have to face that one as far as revisits to the 29 situation, and I don't see any collapse on limit. There's still plenty of activity economically and things like that. So, barring any world events, which potentially could be heating up as Israel may even by this weekend begin more ground offensive, that's where we start to look for escalation, and then the added risk of broader conflagration really begins to have a safety toll on people's minds, like just to be on the safer side going into more secure and benign assets, treasuries, and that kind of thing. So that's what we'll be looking for as we go. But as always, continue to look for me on the Skype chat. Trade well. We'll talk to you later.